All right, there's a real mystery unfolding on Wall Street, and it's a story all about fading hopes and seriously inflated prices. Today, we're going to break down exactly what's causing all this drama and what it might mean for everyone.
So what's really going on here? Why is that warning bell ringing so loud all of a sudden? Let's dig in and get to the bottom of the anxiety that has investors on the absolute edge of their seats.
And look, this isn't just a vibe or a feeling. It's really happening. Futures are falling, and we're seeing some pretty nasty losing streaks hitting the big indexes like the S&P 500 and the NASDAQ. This isn't just random market noise. Something very specific is spooking investors.
And it turns out there's a name for what's gripping investors right now. They're calling it the double disappointment. It's not just one problem, but a really potent one-two punch of two big factors hitting confidence at the exact same time.
So let's put on our detective hats for a minute and uncover the two main clues behind this market retreat. What is this double disappointment all about?
And here they are, our two clues. On one hand, you've got the specter of high interest rates just not going away. And on the other, there's this growing fear of a valuation bubble, especially in that red-hot tech and AI sector. Let's break each one down. So first up, clue number one, the interest rate story. For a while there, everyone was banking on the Federal Reserve to start cutting interest rates, to make money cheaper and help companies grow. But here's the twist. The U.S. economy has been, too strong. And a resilient economy means the Fed has way less reason to cut rates, which puts a major squeeze on those big growth companies.
This quote just nails the feeling on the street. The market was basically ready for a party, expecting the music of monetary easing, that's cheap money, to start playing. But the DJ, in this case the Fed, just announced the track's been delayed. That whole era of easy money isn't coming back as fast as everyone hoped.
Now for our second clue, and this one's a biggie, valuations. The whispers on Wall Street are getting louder, and they're saying that the incredible price run-up in tech and AI stocks has maybe gone too far, too fast. When you hear that valuations for a giant like NVIDIA are stretched, it means prices are so high there's just no room for error. And that makes investors really nervous, so they start selling to lock in their profits before things potentially go south.
So you've got these two major disappointments hitting at once. What happens when hope for cheap money fades and prices look way too high? Well, the reaction is usually pretty swift, and it's driven by one powerful emotion: fear.
And the immediate result? A sea of red on trading screens everywhere. The whole market felt the jitters, but it was those high-flying tech stocks that really led the charge downwards. This is a classic flight to safety, where people dump what they see as risky and look for something, anything, that feels safer for their money.
And we can actually measure all this nervousness. There's a tool for it, called the VIX Index. It's famously known as Wall Street's Fear Index. To put it simply, when the VIX is low, things are calm. But when it starts to climb, anxiety is definitely on the rise.
And just look at this jump. A month ago, the VIX was chilling out down at 13. Today, it's spiked all the way to 19. That's the highest it's been in a month. This isn't just a number, okay? This is a really clear signal of the fear that's gripping the market right now.
Okay, so with all this fear swirling around, everyone is asking the final, crucial question in our mystery. What in the world happens next? Where are the clues that will tell us where this market is headed?
It turns out all eyes are on two huge events. First up is NVIDIA's earnings report. This is being treated as way more than just a report card for one company. It's practically a referendum on the health of the entire AI boom. Then we have the jobs report. That data is going to be a massive clue for the Fed's next move on interest rates, which brings our whole mystery full circle.
Which leaves us with the billion-dollar question that this whole thing really hinges on. Is the AI boom a genuine, new economic reality, or is it just another massive, spectacular bubble that's just waiting for a pin? The answer to that could be coming in the next few weeks.